Today, I'm going to show you which investment will actually make you money this year. Bitcoin just hit $120,000 and gold hit $3,300. But here's the crazy part. One of these is about to explode even higher. I'm talking about real money here, the kind that changes your life, and most people are picking the wrong one. Look, I get it. Everyone's confused about Bitcoin versus gold. Your dad says, buy gold. Your friend says, Bitcoin. Meanwhile, you're sitting there with your money in a savings account making nothing. Here's what nobody tells you. Both Bitcoin and gold are crushing it right now, but they're not the same game. Not even close. Let me break this down for you. The numbers game. Bitcoin is worth $2.4 trillion right now. That's trillion with a T. 5 years ago, most people thought it was fake internet money. Now it's bigger than Amazon, bigger than Google. It's the fifth biggest asset in the world. Gold? It's worth $23 trillion. That's almost 10 times bigger than Bitcoin. Gold has been around for 5,000 years. Bitcoin has been around for 15 years. But here's where it gets interesting. This year alone, Bitcoin is up 15%, gold is up 25%, both are winning. But the stories behind these numbers are completely different. Why gold is hot right now? Gold just hit $3,300 per ounce. That's an all-time high, and it's not stopping there. Goldman Sachs says it's going to $3,700 by the end of this year. JP Morgan says $4,000 by next year. Why is gold going crazy? 3 reasons. First, central banks are buying gold like crazy. Poland bought 67 tons this year. Kazakhstan is buying, Turkey is buying, China is buying. These aren't random people on the internet. These are entire countries betting on gold. Second, the dollar is getting weaker. When the dollar goes down, gold goes up. It's been that way for decades. Third, people are scared. Wars, inflation, economic problems. When people get scared, they buy gold. It's the oldest trick in the book. But here's the thing about gold. It's boring. It just sits there. It doesn't make you money. It doesn't pay dividends. It doesn't grow. It just exists. You have to store it somewhere. You have to insure it. You have to pay people to keep it safe. All of that costs money. Why Bitcoin is different? Bitcoin is not gold. Stop thinking about it like gold. Bitcoin is something completely new. Here's what makes Bitcoin special. There will only ever be 21 million Bitcoin. Ever. That's it. No more. No less. It's written in code. Nobody can change it. Not governments, not banks, not even the guy who created it. Gold, nobody knows how much gold exists. We keep finding more. We might find gold on asteroids someday. But Bitcoin, 21 million. Done. Right now, there are about 19.9 million Bitcoin that exist. That means only 1.1 million left to create. And it gets harder to make new ones every 4 years. This is basic math. More people want Bitcoin. Less Bitcoin available. Price goes up. But here's where Bitcoin gets really interesting. Big companies are buying it. MicroStrategy owns 568,840 Bitcoin. That's worth $58 billion. BlackRock's Bitcoin fund has 700,000 Bitcoin. That's $83 billion. These aren't crypto bros in their basement. These are the biggest financial companies in the world. They're moving billions of dollars into Bitcoin. The speed game. Want to send gold to someone in another country? Good luck. You need trucks, you need security, you need insurance, you need banks. It takes weeks, it costs thousands of dollars. Want to send Bitcoin to someone in another country? You can do it in 10 minutes from your phone for a few dollars. This matters more than you think. Bitcoin is money that moves at the speed of the internet. Gold is money that moves at the speed of trucks. The volatility, truth, everyone says Bitcoin is too volatile. They're right. Bitcoin goes up and down like a roller coaster. This year it hit $122,000. Last year it was around $40,000. That's a big swing. But here's what nobody tells you. Bitcoin is getting less volatile over time. In the early days, Bitcoin would swing 400% in a year. Now it swings 30% to 80%. Still a lot, but way less than before. Gold swings about about 12% per year. Much smoother, much calmer, much more boring. Here's the question you need to ask yourself. Do you want smooth and boring, or do you want the chance to make real money? The performance numbers. Let's talk about actual returns. Real money, the stuff that matters. From 2020 to 2025, Bitcoin returned 800%. Gold returned 80%. Bitcoin made you 10 times more money. But Bitcoin is riskier. Way riskier. You could lose 50% of your money in a few months. With gold, you might lose 20% in a bad year. Risk and reward always connected. The institution story. Here's something that changed everything. In 2024, the US government approved Bitcoin ETFs. These are funds that let normal people buy Bitcoin through their regular investment accounts. In just the first few months, these funds brought in $14.8 billion. That's more money than most countries have. Suddenly, your mom can buy Bitcoin in her retirement account. Your grandmother can buy Bitcoin through her financial advisor. This is huge. Gold has had ETFs for years. They're worth $290 billion total, but Bitcoin ETFs are growing faster than anyone expected. The energy debate. People love to hate on Bitcoin for using too much energy. They say it's bad for the environment. They say it wastes electricity. Here's the truth. Bitcoin uses about 138 terawatt hours of electricity per year. That's about 0.5% of all electricity in the world. I can see it's the same amount of electricity that Poland uses. Is that a lot? Depends on how you look at it. Bitcoin is securing $2.4 trillion worth of value. That's more than most countries' entire economies. Gold mining uses energy too. Lots of energy. Trucks, machines, processing, transportation, storage. When you add it all up, gold might use more energy than Bitcoin, but Bitcoin gets all the hate because it's new and people don't understand it. Everyone wants to know what's going to happen next. Nobody knows for sure. But here's what the smart money is saying. For Bitcoin, the average prediction for the end of 2025 is $145,000. Some people say $200,000. Some say $250,000. The really crazy people say $500,000. For gold, Goldman Sachs says $3,700 by the end of this year. JP Morgan says $4,000 by next year. In a recession, some people think it could hit $4,500. These are all guesses, but they're educated guesses from people who manage trillions of dollars. The storage problem. Gold is heavy, really heavy. 1 ounce of gold is worth $3,300, but it weighs 1 ounce. If you want $100,000 worth of gold, you need 30 ounces. That's almost 2 pounds of metal. You need a safe. You need insurance. You need security. You need to worry about theft. All of that costs money. Bitcoin. You can store $1 billion worth of Bitcoin on a piece of paper or in your head. 12 words can control unlimited amounts of Bitcoin. Try doing that with gold. The government factor. Governments love to control money. They print it, they regulate it, they tax it, they track it. Gold, governments can ban it. They've done it before. In 1933, the US government made it illegal for Americans to own gold. They forced people to sell it to the government at a fixed price. Bitcoin is different. It's decentralized. No single government controls it. No single company controls it. It exists on thousands of computers around the world. Can governments ban Bitcoin? They can try. China tried. It didn't work. Bitcoin kept growing. It kept working. The network effect. Here's something most people don't understand about Bitcoin. It gets stronger as more people use it. This is called the network effect. Think about Facebook. Facebook with 100 users is worthless. Facebook with 3 billion users is worth $800 billion. Same with Bitcoin. Bitcoin had 100 million users in 2020. It might have 1 billion users by 2030. More users means more value, means higher prices. Gold doesn't have network effects. Gold with 1 million users is the same as gold with 1 billion users. It's just metal. The Lightning Network Bitcoin has a problem. It's slow. It can only handle 7 transactions per second. That's not enough for everyone to use it. But Bitcoin developers built something called the Lightning Network. It's like a highway system for Bitcoin. It can handle millions of transactions per second. The Lightning Network is growing fast. It has over 5,000 Bitcoin in it right now. That's worth $500 million. Companies like Revolut and Steak and Shake are using it. This solves Bitcoin's speed problem. The US government stopped fighting Bitcoin. They started embracing it. President Trump signed executive orders supporting Bitcoin. This is huge. For years, Bitcoin companies had to worry about government regulation. Now the government is on their side. Gold never had this problem. Gold was always legal. But Bitcoin needed this regulatory clarity. Now it has it. The inflation hedge. Both Bitcoin and gold are supposed to protect you from inflation. When governments print too much money, your dollars become worth less. Hard assets like Bitcoin and gold are supposed to keep their value. Does it work? Sometimes gold has been protecting people from inflation for thousands of years. Bitcoin has only been around for 15 years, so, we don't know for sure. But here's what we do know. Bitcoin has a fixed supply, 21 million coins, that's it. Governments can't print more Bitcoin. They can print more dollars. They can't print more Bitcoin. Gold has a growing supply. We mine more gold every year. About 1% to 2% more gold enters the market each year. That's not a lot, but it's not zero. The diversification play. Here's what smart investors do. They don't pick just one. They pick both. Bitcoin and gold don't move together. Sometimes Bitcoin goes up when gold goes down. Sometimes gold goes up when Bitcoin goes down. Sometimes they both go up. Sometimes they both go down. By owning both, you spread your risk. You don't put all your eggs in one basket. How much of each? That depends on your risk tolerance. Young people might want more Bitcoin. Older people might want more gold. Risk takers might want 80% Bitcoin and 20% gold. Conservative investors might want 20% Bitcoin and 80% gold. The low like wow chi o mint so fact. Like quite daunty means how easy it is to buy and sell something. Bitcoin is very liquid. You can buy and sell Bitcoin 24 hours a day, 7 days a week. The Bitcoin market never closes. Gold is liquid too, but not as liquid as Bitcoin. Gold markets close on weekends. Gold markets close on holidays. If you need to sell gold at 3 a.m. on a Sunday, you're out of luck. Bitcoin never sleeps. The market is always open. You can always buy, you can always sell. The correlation game. Financial advisors love to talk about correlation. Correlation means how much two investments move together. Bitcoin and gold have low correlation. When stocks go down, gold usually goes up. When stocks go up, gold usually goes down. Bitcoin is more complicated. Sometimes it moves with stocks. Sometimes it moves against stocks. This is actually good for your portfolio. You want investments that don't all move together. When one goes down, another goes up. This smooths out your returns. The millennial factor. Young people love Bitcoin. Old people love gold. This matters because young people are entering their prime earning years. They have 30 to 40 years to invest. They can take more risk. Old people are retiring. They need steady income. They can't afford to lose money. They prefer safe investments like gold. But here's the thing. Young people are becoming the majority. Baby boomers are retiring. Millennials and Gen Z are taking over. They grew up with the internet. They understand digital money. As these generations get richer, they're going to buy more Bitcoin. This could drive prices higher for decades. The institutional adoption. The biggest change in Bitcoin happened in 2024 and 2025. Institutions started buying Bitcoin, not just hedge funds, not just tech companies, banks, insurance companies, pension funds. These institutions manage trillions of dollars. When they allocate just 1% of their portfolios to Bitcoin, that's billions of dollars of new demand. This is just the beginning. Most institutions still have zero Bitcoin. As they start buying, the price could go much higher. Gold has had institutional adoption for decades. Central banks own thousands of tons of gold. Pension funds own gold. Insurance companies own gold. This demand is already built into the price. The scarcity timeline. Here's something most people don't know. Bitcoin becomes more scarce every 4 years. It's called the halving. The amount of new Bitcoin created gets cut in half every 4 years. The last halving was in 2024. The next one is in 2028. Each halving makes Bitcoin more scarce. More scarce usually means higher prices. Gold doesn't have halvings. Gold production stays roughly the same every year. Sometimes it goes up, sometimes it goes down, but there's no built-in scarcity mechanism. The technology evolution, Bitcoin is constantly improving. Developers are always making it faster, cheaper, and more secure. The Lightning Network is just one example. There are dozens of improvements coming to Bitcoin. Better privacy, better scalability, better smart contracts. Each improvement makes Bitcoin more useful. Gold is gold. It's been the same for thousands of years. It doesn't improve, it doesn't evolve, it just sits there. The global adoption Bitcoin is global from day one. You can use Bitcoin in every country. You can send Bitcoin to anyone with an internet connection. There are no borders with Bitcoin. Gold is global too, but it's harder to move. You need permission to move gold across borders. You need to pay taxes. You need to declare it to customs. Bitcoin doesn't care about borders. It doesn't care about governments. It just works. The volatility opportunity. Everyone complains about Bitcoin's volatility, but volatility creates opportunity. When Bitcoin drops 30%, that's a buying opportunity. When it goes up 50%, that's a selling opportunity. Gold's low volatility is nice for sleeping at night, but it also means lower returns. You can't make big money without taking big risks. The key is position sizing. Don't put all your money in Bitcoin. Put an amount you can afford to lose, then let it ride. The long-term sentisanen keko fs sampon. Sef bes disa microforma desensio gisuapon. Here's what I think happens over the next 10 years. Bitcoin becomes a standard part of investment portfolios. Every financial advisor recommends a small Bitcoin allocation. Every pension fund owns some Bitcoin. Gold remains important for central banks and conservative investors, but it becomes less important for regular people. Younger generations prefer digital assets. Bitcoin could reach $500,000 or $1 million per coin. Gold could reach $5,000 or $10,000 per ounce. Both could do well, but Bitcoin has more upside potential. The risk assessment, let's be honest about the risks. Bitcoin could go to zero. It probably won't, but it could. New technology could replace it. Governments could ban it. Quantum computers could break it. Gold could also lose value. If we find massive gold deposits, the price could crash. If we figure out how to make gold artificially, it becomes worthless. But gold has 5,000 years of history. Bitcoin has 15 years. Gold is the safer bet. Bitcoin is the higher upside bet, the practical allocation. Here's what I would do. And this is not financial advice. I'm just telling you what I would do. I would put 60% of my alternative investments in Bitcoin. I would put 40% in gold. I would start small, maybe 5% of my total portfolio in these alternatives. If Bitcoin goes up, I win big. If Bitcoin goes down, gold protects me. If both go up, I win twice. If both go down, I only lose 5% of my money. Young people could go higher on Bitcoin, maybe 80% Bitcoin and 20% gold. Older people could go lower, maybe 20% Bitcoin and 80% gold. The key is to start. Don't wait for the perfect time. Don't wait for the perfect price, just start. The entry strategy: how do you buy Bitcoin? Easy. Open an account with Coinbase or Kraken. Verify your identity, transfer money from your bank. Buy Bitcoin takes about 10 minutes. How do you buy gold? Also easy. You can buy gold ETF through any broker. You can buy physical gold from dealers. You can buy gold coins from coin shops. Both are easier than ever to buy. No excuses. The storage strategy. Bitcoin storage is tricky. You can leave it on the exchange. That's easy, but risky. Exchanges can get hacked. They can go bankrupt. They can freeze your account. Better to move it to your own wallet. Hardware wallets are the safest. Ledger and Trezor are the most popular. They cost about $100. Worth it for the security. Gold storage is also tricky. You can keep it at home. That's risky. You can keep it in a bank safe deposit box. That's safer but costs money. You can use a storage company. That's safest but costs the most money. The tax. Titen bits, Tabcoin, Tencoin, and gold have different tax treatment. In the US, Bitcoin is taxed as property. When you sell Bitcoin, you pay capital gains tax. Hold it for more than a year and you pay lower long-term capital gains rates. Gold is taxed as a collectible. The tax rates are higher, up to 28% for long-term gains. Bitcoin maxes out at 20% for long-term gains. This is another advantage for Bitcoin. Lower taxes mean more money in your pocket. The exit strategy: when do you sell? That's the million-dollar question. Literally, some people never sell. They hold forever. They pass it on to their kids. This works if you believe in the long-term story. Some people sell when they need the money. House down payment, kids' college, retirement. This is practical, but you might miss out on future gains. Some people sell portions along the way. They take profits when prices are high. They buy back when prices are low. This takes skill and timing. There's no right answer. It depends on your goals and your situation. The final verdict: Bitcoin or gold? Here's my take. Both are good. Both belong in a portfolio. Both protect against inflation. Both are alternatives to stocks and bonds. But if I had to pick just one, I'd pick Bitcoin. Higher upside, more innovation, better technology, younger demographics, institutional adoption, regulatory clarity. Gold is great. It's been great for thousands of years. It will probably be great for thousands more years, but it's not going to make you rich. Bitcoin might make you rich. It also might make you poor, but the potential upside is enormous. The safe play is gold. The smart play is both. The aggressive play is Bitcoin. What's your play? That's up to you. But whatever you do, don't do nothing. Don't let your money sit in a savings account earning nothing while Bitcoin and gold are making new highs. The time to act is now, not tomorrow, not next week, not next month. Now both Bitcoin and gold are telling you the same thing. The old financial system is broken. Inflation is coming. Governments are printing money. You need to protect yourself. Bitcoin and gold are both saying the same thing, but they're saying it in different languages. Gold speaks the language of the past. Bitcoin speaks the language of the future. Which language do you want to speak? The choice is yours, but the clock is ticking. Every day you wait is another day of potential gains you're missing. Bitcoin is at $120,000. Gold is at $3,300. Both are at all-time highs. Both could go higher, both could go lower, but both are better than cash. Don't let fear keep you on the sidelines. Don't let confusion keep you from acting. Don't let perfection be the enemy of good. Start small. Start simple. Start now. Your future self will thank you.